Hello and welcome to Building the Premier Accounting Firm. This is a podcast dedicated to helping individuals start, build, and have the premier accounting firm in their area. I'm your host, Roger Connect, president of Universal Accounting Center, and for more than 20 years, I've been working with accounting professionals to help them build their dreams and get paid what they're worth. It's exciting for me to each and every week have on the show guests that we can use to actually have conversations about things that are relevant to having the premier accounting business. It's in this that we discuss very appropriate topics ranging from marketing, selling, pricing, onto tech stacks, as well as mental health, client relations, and so much more. And today's going to be no exception. Now, one of the things that I want to do is just introduce, first of all, the guest. It's Jason Parr. He is basically where the buck stops at Pisner Johnson. And it's a good thing that he's been with the firm for over 25 years. It takes that kind of deep experience in all these services that they perform to make sure that they have the right people working with the right clients to drive the results that their clients deserve. Parr actually lives in Dallas, and he and his wife have 6 children and 7 grandchildren. He enjoys golf, racquetball, ultimate frisbee. We're going to have to talk about that. And a new favorite that's popular at their St. George, Utah office, pickleball. I do know about that as well. So, Jason, welcome to the show.
Hey, Roger. I'm excited to be here. Thank you very much.
This is going to be a lot of fun. First of all, I always want to begin with just kind of your entrance into the accounting profession. It can go back to college or even before. But why accounting? How did you get into this profession?
It's a great question, but let me take one step backwards and just update you. Since that bio was created, we've actually had 4 more grandchildren.
Oh, congratulations.
So, thank you.
Well, just so that you're aware, I just had my first literally last Thursday, and I've been spending the weekend basically being grandfather for the very first time. So I'm not going to catch up to you, but I'm starting. How about that?
It's fantastic. We've got number 12 due in December. We'll have an even 12 at the end of the year. And being a grandparent is the only thing that I have found that's not overrated. It's exactly what people tell you. It's incredible. So congratulations to you as well. That's fantastic.
Thank you. Yeah. The part right now is basically helping my daughter and her husband basically start this new chapter. It's incredible. I can honestly say I'm very humbled by the whole experience, and it is taking me back to when we had our children. So this is fun. I'm enjoying it.
Oh, it's incredible. So accounting, what a great segue into accounting. Posterity to follow in your footsteps, so to speak. I thought I was going to be an engineer, to be quite honest with you. This is going back 26 years. This month will be my 26th year at Pisner Johnson, and the firm is celebrating its 30th year this year as well. And I thought I would be an engineer. I went over to the engineering school locally here in Dallas, and I discovered that wouldn't be for me. And so I took a personality test and an aptitude test, and came up with 2 options. The test said that you would be really great in accounting or as a funeral director. and I thought, well, I've used numbers before, but I haven't done much around funeral homes. So I'm going to go over to the business school, and literally that's what began my accounting career is just going to school to get an accounting degree. And then I got connected with one of the founding partners over at Pisner Johnson, Andrew Johnson. He introduced me to his partner, Jerry Pisner, and I was still in school.
Okay.
This is back in '96, and they offered me a position to serve as a staff assistant while I was finishing up my degree. And I never left. I fell in love with state and local tax, especially sales tax, and continued with the firm, grew up in the firm, know everything backwards and forwards about sales tax and state and local tax. And over the last 5 years or so, I'm learning how to run an accounting firm, a state and local tax consulting firm. I've been serving as the president and CEO. And that has just been a new challenge, a new excitement, new opportunity. But I've learned a lot about how to sell what we do, how to price what we do, how to be a resource in the industry, both to companies and to accountants and CPAs in the industry.
Well, this is great. Now, I'm going to tell you, just to go back to your description of getting into the profession, the personality assessment and so forth, you literally conjured up in my mind that skit from Monty Python where the accountant wants to become the lion tamer. No, no, no. I want to be a lion tamer. Well, you ought to stick with accounting.
Yeah.
That's so funny. Okay. All right. So with that context, obviously you're now running the business. You've been there like I have for more than 20 years. This is incredible.
Mm-hmm.
And many people talk about niching and so forth. Well, your expertise is in sales tax. So I mean, everybody's paying sales tax, but how do you introduce it beyond just sales tax? Why is it important? What is it, let's say?
Yeah, 30 years ago when the firm started, sales tax, was looked at negatively. It's just not a big deal, not an issue, not a problem, and it's become more and more so over the years because you have 45 states that impose a sales tax, and they do it under their own sales tax law, and so the tax law itself is different from state to state. And understanding your responsibility and becoming compliant as a collector of sales tax on your taxable sales and services has become more complex and complicated over time. Go back just almost 5 years, 4.5 years, and you have the big Wayfair decision, which a lot of people know about. There hasn't been a Supreme Court decision on sales tax in decades. And so this was a big deal because sales tax is important right now because to understand your responsibility, it used to be all about where you're located. Now it's all about where your customers are located.
Yeah.
And sales tax is we call it a margin killer because it's meant to be collected from your customers in jurisdictions where states and local jurisdictions can require you to register and collect that tax on your sales. So if it comes out of your own pocket with penalty and interest because you didn't know what your responsibility was, it can kill the margins over the years where it's collected out of your pocket. So it's a big deal now.
So there's in my way of thinking about this, there's two types of scenarios. There's the established business that has a pretty good understanding of what it is they're selling and how it's being taxed and coming in and managing that. But there's so often the new business that is going into markets that are new to them and they're unaware of these ramifications. They're new businesses in the sense that you're helping them become established and set up their books. And these things can, like you say, be deal killers and margin killers. So I just want to give some context so that the listeners can have some perspective on this, because many may not even be aware of the many idiosyncrasies that exist state by state, county by county, city by city. But there's some places where if you just cut a bagel in half, it's taxed differently than if you sold the bagel as a whole. Give me some illustrations of that just to show to the audience that this is just kind of some legal quagmire that everybody needs to be aware of.
Yeah, there's no doubt. So if you're a new or an old business, the landscape has changed 4 years ago because maybe you're a long-standing company and you've decided to start selling online, or you've been selling online, and so your products or services are sold or provided in multiple states, but you've always been situated in one state. And so your sales tax responsibility has been on sales to that one state where you reside because you have what we call physical nexus. And you haven't really thought about the sales going into other states. Just think about Amazon about 10 years ago when people started buying everything on Amazon so that they wouldn't have to pay sales tax.
I do remember those days.
Yes, not understanding that sales tax is actually due on those transactions, but it's a determination of who it's due from. And so if you're not too familiar with Wayfair versus South Dakota, I'll be very brief. Essentially, Wayfair sued South Dakota because South Dakota was indicating that they need to collect their sales tax on their online sales into South Dakota. Well, that went up the chain really quick over to the U.S. Supreme Court, and the U.S. Supreme Court said South Dakota is being fair in their approach. And the way they were being fair is they were only assessing this responsibility if you exceeded an economic threshold. So your sales volume was over a certain amount, or you had over a certain number of transactions into the state. So you had some protection if your sales threshold was below that, or your transactional threshold was below what they deemed responsible. Well, then every state in the U.S., including Missouri, the last holdout, whose economic nexus legislation becomes effective January 1 of 2023, every state now has legislation that says if you have a sales volume above a certain threshold in our state, regardless of you ever being in our state, you now have a responsibility to collect and remit tax on your taxable sales into our state. And as you've indicated, to segue into what you originally asked, is every state has a different tax law on what they tax. So just as you've indicated, if I buy a 6-pack of bagels in a particular state, they say that's a grocery item, not taxable.
Yep.
In another state, those 6 bagels are a grocery item and they tax grocery items. Or you can cut that bagel, put some schmear on it, and you can send it out the door, and that's food prepared, ready to go. It's taxable, whereas the 6-pack of bagels is not. It could be supplements, which are taxed either at a reduced rate in some states, not taxed in other states, taxed fully in other states. So it depends on what you sell, where you sell it, and understanding those tax laws across all the states can just be overwhelming when all you've had to worry about was the taxability in 1 state, 2 states, or 3 states.
Yeah.
And so accountants, accounting firms, CPAs, bookkeepers, et cetera, across the board are being inundated with people asking them questions. What do I do? Because I know this Supreme Court case is out there. I know it's been out there for a few years. Am I exposed? Is there something that I need to be doing? And the answer almost 100% of the time is yes, there's something that you need to be doing.
Yeah. So the way I look at this, and obviously this varies company to company, client to client, is like you said, it's a volume or a revenue number that you need to be conscious of on a state by state, even city, county level. And that number you need to be familiar with only because if you've got revenue that's going into that city because of whatever it is you're selling. I mean, if you're selling a single yacht to somebody, that may be obviously over that threshold that we're talking about, and it's just a single transaction. But the point is you've got to be familiar with where that sale is occurring, and then that threshold that's associated with it. But then there's the volume, regardless of the dollar amount, there's the number of transactions that's occurring. And that threshold could be what's getting you over the taxable threshold that you need to be aware of. So I like how you've described it. It's something that we need to be conscious of, watching and observing, and bringing to the attention of our clients as we're working with them. So what are some of the gotchas that you've seen that have crept up, that have caught business owners by surprise, that as accounting professionals, we should be more conscious of and aware of?
Oh, it's a great question. And not to get into the weeds, it's not just those thresholds and those transactions. It's the period, right? It could be the last calendar year that you're looking at for those thresholds. It could be a rolling 12 months for those thresholds. It could be based on your total gross sales into that state, or it could be just based on the taxable sales into that state. And so you're needing to know taxability and the volume and the dollar amount of those transactions. So determining whether you have Nexus is one of the gotchas, because there's a lot of DIY approaches out there where you plug in your data and the data comes back and says you need to register here, and your responsibility is fairly material in this one state or these few states, so you probably should enter a voluntary disclosure program. Well, if you just go do that, you might be putting yourself in more jeopardy or more harm than consulting with your advisor on your situation state by state. And so companies are at a loss of what to do. And now that we're 4 years out, I call this year and next year the year of enforcement, whereas the state says, okay, there's been plenty of time for you to take action to become compliant in our state. So now we're going to start looking for individuals who aren't compliant and essentially audit them and determine whether they owe us tax dollars out of their own pocket.
Well, you said audit. I would say make an example of, but that's pretty much the same thing, I guess. So you're right. I think we're at that pivot moment where they're going to simply say that, say mea culpa, I didn't know, and forgive me. Those years are now behind us, and it is something that we need to be more conscious of as we work with our clients. So the next question is there kind of a good set of questions that as accounting firms we need to know that we could use as a litmus test for our clients?
No doubt. We've tried to simplify this into three important questions every company doing business in the U.S. needs to ask themselves and find answers to. And we say the same thing to accounting firms. These three questions are the most important questions that can be asked, and there's answers to them can be provided. It's complicated, but it's not overly complicated to get these answers. The most costly mistake you can make is ignoring the fact that you likely have a sales tax responsibility. Don't overlook that. So, three questions. Question number one: do I have Nexus? Or if you're an accounting firm, does my client have Nexus?
Okay, so let's stop right there. What is that question asking?
So Nexus is any tie to the state where the state can require you to register and collect and remit their tax on your sales into that state. Mm-hmm. And there's two types of Nexus, and this gets overlooked as well. There's physical Nexus, which has been around for 50 years. And there's economic Nexus, which is new on the horizon in the last 4 years because of the Wayfair case. And so sometimes we have individuals come to us and they've heard about Wayfair. They know they might have a situation with Nexus, and we find out that they've had third-party contractors doing work on their behalf in a dozen states or 24 states, not recognizing that that creates physical Nexus. Inventory through Amazon. Your inventory held by Amazon, distributed by Amazon through their distribution centers, means you have property in a state, you have physical Nexus. And so it's important that the question is, do I have Nexus? And then it breaks down into, is there anywhere that I have physical Nexus or anywhere that I've exceeded these thresholds for economic Nexus?
Perfect. I love it. So question number one, the Nexus, whether or not we have that physical location of product or service, and then the next are the thresholds that we were discussing. All right, so let's go to question number two.
Question number two, really important, is what I sell taxable? And the issue with taxability is it's different across every state, right? So just in the example that you were given about bagels and donuts and supplements and all the like, the taxability of what you sell differs across each state. So if I have Nexus and what I sell is taxable, then I may have a responsibility to collect tax. And so those are the two primary questions that are important.
So if I've got that Nexus at the question number one, I go to question two, is it a taxable item in that venue? Number three, what's the third question?
Right. So if I have Nexus, but what I sell is not taxable in that state, then obviously I've got no responsibility to collect tax, right? So the third one is how do I sell my items? Right. So every state that has passed economic nexus legislation has also passed marketplace facilitator laws that essentially say the marketplace is the responsible party for collecting the tax, not the sellers on that marketplace. So I could be a seller on Amazon. I could have Nexus because I have physical inventory in a distribution center in a given state. Or I could exceed the economic nexus threshold, and what I sell is taxable, but I only sell on Amazon's marketplace. Therefore, I don't have a responsibility to collect tax because Amazon has the responsibility to collect tax. So I need to know, do I have nexus? That's always start with that. And then I need to understand the nature or the taxability of my sales. And then I need to know if that is true, am I the party that's supposed to be collecting tax on those sales?
So if I could simplify that, it's basically point of sale. So if I happen to be using a platform like Amazon, you're saying that Amazon's supposed to actually help me in taking out the taxes due and collecting those for me.
They are, but every marketplace is not the same.
Correct.
And some have the ability to adopt appropriately. Obviously, Amazon is the leader on adopting because they're working directly with the states. So I need to understand what platform I'm on and whether I need to manage any collection of tax. Now, in an audit scenario, the marketplace is going to be the one held responsible. But you need to understand that if you sell on Amazon and Etsy and Walmart, and you sell on your own website on Shopify, and you have one brick and mortar store or one people can come to your home and purchase items, that you have a responsibility to collect tax when it's not on a marketplace. So the laws kind of shift the responsibility, but it becomes a little more complex if you sell on multiple platforms and you sell on your own website.
Perfect. Now, as an accounting professional, obviously I'm wanting to work with my clients and make sure they're compliant, more importantly, collecting and paying this. So my next question is what best advice do you have for the accounting professional to help them help their clients?
So there's a lot of accounting firms that don't have a state and local tax group. It's not part of their practice, or they don't have good resources available to them to answer some of these questions. One of the things that we would tout is that you can always reach out to us and we can have a conversation, and there's no cost associated with that, right? We want to educate on these issues so that people can find success in what they're doing. And so there are automated solutions out there that can provide some additional information that you need. There's the DIY approach that accountants can use. There's other firms and resources that they could connect with, or other resources that they could utilize. The key is knowing the questions to ask and then identifying the resources to be able to answer those questions for their clients.
So long are the days gone by where the person actually sold online and didn't have to pay taxes. Now we've got all of these nuances in these last 4 years that we've got to be aware of. So as accounting firms, is there a certain industry that's more sensitive to these sales tax issues? Obviously, someone selling online is more likely to have sales cross states and so forth. What kind of other industries could really be affected by this that we should be aware of?
That is a phenomenal question, and I hate to even answer any industry, right? Because it's not industry specific anymore, it's customer specific, right? So it's all about not where you're located or what industry you're in, but it's where your customers are located, where your sales are being sent to, where your services are being provided, is the key to determining whether you have a responsibility. The next question the accounting firm needs to ask is, what do I do for my client, right? I get a chance to ask these questions. We answer these questions. Okay, my client has Nexus. What they sell is taxable in 30 states, and they're the responsible party for collecting the tax. What are the next steps? And there's some remedies to be able to become compliant. I mean, you could just simply register, and you have to make a determination if you're going to do a historical registration or a prospective registration, as we call it. Or if you've got a material amount of liability, meaning you should have been registered 2 years ago based on the Nexus threshold, and you've been making a large amount of sales over those 2 years, and you didn't collect tax, it's going to be unlikely that you could collect that tax now at a later date. You really have to find a way to come forward to the state, and every state has what's called a voluntary disclosure program to be able to come forward, identify taxes that should have been collected that weren't, and then work with the state to limit how far back they look, to waive the penalty, and some states will actually waive some or all of the interest as well, to be able to come forward, clean the slate, and be compliant going forward. In that regard, when you start providing those types of advisory or consultation, we would just say, get with us, because in everything that I do, I really believe in this, that collaboration builds confidence. So when we're saying get a hold of us and let's talk, it's so that we can collaborate and come up with next steps or remedies for whatever situation your client or prospective client might be in. And in doing that, we can make some suggestions that put them in a position not to hit a pitfall, right? So if you know you need to register, don't just go register. Talk with us or talk with a state and local tax professional about what the ramifications are for registering, what date you should use when registering, et cetera. So consultations are a huge deal for us in trying to educate the marketplace.
I like that. Now, I want to go back to thresholds because I'm going to ask a question that I know you're going to be reluctant to answer, but I'm still going to ask you to answer it. So when it comes to thresholds, let's assume that we've determined Nexus and we're determining Nexus, let's say, and I'm trying to figure out what is that dollar threshold that each and every state is establishing. And obviously it's going to vary. I would imagine some are repurposing their laws from one state to another just for passing ease and so forth. But the question I'm trying to ask is that threshold of revenue amount, is it thousands, tens of thousands, hundreds of thousands, millions of dollars in revenue that the threshold is typically met? What kind of bar are we looking at here?
Yeah, for the most part, across most states, the large majority of states, they have simply followed the South Dakota law, which was agreed to by the U.S. Supreme Court as fair. And so 100,000 in sales or taxable sales in states. In the larger states, New York, Texas, California, you might have a threshold around 500,000. Most of the states are doing away with the transactional thresholds, and they really are more focused on the sales volume into the state.
So again, those numbers were 500,000 for some of the states. Most of them are around that 100,000 threshold.
Yeah, almost all of them are outside maybe a couple of handfuls are that 100,000, and it could be based on your last calendar year, could be based on a rolling 12 months, so you're keeping track each month. It also could be based on gross sales at 100,000 or just taxable sales once they reach 100,000.
So maybe I'm oversimplifying this, but a good rule of thumb is just if I'm working with a client is just to sort their sales, as you said, by calendar year or rolling 12-month and just see if I can group the total volumes by state and just at a litmus test, just see it. Is there any state that I'm selling to that's over 100,000 in revenue?
Totally. That's what we do in our own risk analysis. I mean, you start out with that aggregate by state. These economic thresholds right now are only by state. They're not by some of these city jurisdictions that administer their own sales tax.
Yeah.
And so you're looking sales volume by state. That's a perfect place to start. If you can even use our website. We have a risk calculator. You can go in there and enter the information, and it'll spit back the regulation and what the thresholds are, and it does that state by state. But that's a perfect starting point.
I love it. That makes it real simple. I like that because as the listeners are hearing this, I'm sure they're just wondering, okay, well, how do I just at quick glance assess whether or not I even need to make this an issue? And I think that's a good place to begin as well as part of that Nexus assessment, right? So
yeah, no doubt.
I'm going to switch gears on us just because I think this conversation has gone very, very well, but I'd like to kind of move it into something more personal. You say you've got a place down in St. George. I'm curious, have you been to the plays at Tuacahn?
Oh, yeah, no doubt. Yeah, I've been to several of them. One of our founding partners moved to St. George about 8 years ago, and he's actually 1 year into a 3-year sabbatical. But when he moved up there, he started working out of his home, then in an executive suite, and we started hiring students from Dixie State University, which I believe is Utah Technical University now.
They did change their name, yes.
They did. And yeah, we've been to several plays. We've enjoyed a lot of fun times. I'm in St. George about once a quarter because that's where our firm has kind of grown and built up after this move.
Very good. Small world. I was just down there a few weeks ago, so there you go.
I was just there 2 weeks ago meeting my brand new granddaughter. Yeah, no doubt.
There you go. Congratulations again. Yeah.
Thank you.
So let's talk about pickleball. That's a sport that a lot of people are becoming familiar with. How would you describe it?
I would say it's like ping pong and tennis. I would call it ping pong on top of the ping pong table is probably how I would best describe it.
Yeah, I'd say it's a mix between tennis and ping pong. It's always a good example.
Yeah, a little smaller court. I think just about anybody can play pickleball. And it's the fastest growing sport in the U.S. It was just kind of a West Coast thing. And I started learning about it visiting St. George. And they have some incredible pickleball facilities out there, 30, 40 courts all in one little park recreational area.
Oh,
Here in
yeah.
Dallas, you can barely find a pickleball court. A lot of people will take gyms, basketball gyms, and they'll tape off the perimeters of
Yep.
pickleball so that they can pick that up and play. But we're seeing more and more of them open, especially as it spreads across the U.S.
Yeah, it's crazy how popular it is here. So that's kind of fun. All right. So last question. You're in a position where you're the president of the company, as you mentioned. You're running the business. Well, where do you see things going in the next few years? What's on the horizon, especially regarding sales tax?
I think you're going to see 4 years out from this decision, you're going to see more and more states enforce their new legislation. Most states have a statute of limitations on refunds, also on liabilities. And as the states start hitting their legislation becoming effective 3, 4, 5 years back, they're going to want to enforce compliance. And what we're finding is there's probably 80% of the marketplace. So 80% of companies doing business in the U.S. who probably need to register in one or more additional states who are not currently registered in those states.
Fascinating.
So it's a significant issue and opportunity for accounting firms because so much needs to be done to help people comply with this law. And most companies, either they don't know, their head is in the sand, which is the most costly mistake you can make, um, or they're aware of it, they're just not ready to move forward. And so accounting firms can really help companies navigate that landscape.
I like it. All right. So what I'm going to do is I'm going to wrap this up, kind of summarize this, and come back to you for a closing thought. Actually, I just remembered one last question I wanted to ask. We've got to do at least some respect for the sales tax. Can you just give us a good summary of why this is being collected? How do the states actually use this? Just to give some context to why all the trouble.
Well, I think for years and years, the pendulum kind of swings on taxpayers and governments. And there was probably a decade there where legitimately the onset of online sales picked up so dramatically, and states really didn't have the ability to go audit their citizens for the tax that was due on the purchases that they were making. And sellers that were making these sales, with physical nexus being the only issue, just didn't collect tax on those sales. So there was a lot of lost revenue, regardless of how the state uses that revenue across the board. Some states, it's the only revenue they have from a taxing standpoint. And so they realize that we're losing out because nobody's taking responsibility and we're not going to audit our citizens for sales tax. And I think along the line, what you saw were these cases by states. The states were starting to reach beyond their limits, saying, okay, listen, you've created a market here through your online website, and you really should be collecting our tax. Well, there's no law that you have on your books that says we have to do that. So they started enacting them. And of course, there was a lot of pushback. You can't do that. It's against the law. And then the Supreme Court case came down and said, actually, because they put some protections in there so that not every person selling into the state has to actually comply with the law, we think it's fair. And so we're going to uphold it. And then you saw every state at that point enact similar laws. And so that's why you're seeing sales tax be such a significant issue right now, and such a small number of companies complying, because they just don't understand. It just doesn't make sense that you have to engage in a state's law where you don't reside and you don't have any physical presence. But it's here and it's real, and people need to understand it.
Perfect. No, this is an excellent topic. All right. So I'm going to wrap this up, like I said, with a summary, and I'm going to come back to you to see what your closing thought will be. And it's very simple. First thing before we go there is the offer. We do have an offer from Jason. If you go to the episode description, you'll find information that you can take advantage of, where he's actually providing the ability to go, as he was sharing earlier, and basically assess whether or not you have some tax liabilities that you need to be aware of for yourself or clients. But he also has what's there called the What's Next call that you can actually sign up for. It's absolutely free. It's for accounting professionals, business owners, to basically contact them and get a free consultation where they can talk with a sales tax practitioner and just basically get some tax advice. So I would definitely encourage you as listeners to feel free to take a chance or take a moment and reach out to Jason's team and see whether or not this is something that you need to be aware of for yourself, your clients, and see what you can learn on a more specific basis with the questions that you may be able to ask. So take advantage of going to the episode description and getting the information there as to how you can take advantage of that. The next thing I'd like to do is just summarize by saying sales tax. It's absolutely incredible. The days of, like we were describing earlier, just having a physical location and using that to determine your tax liability and your sales tax that need to be collected, that's gone. And so we all need to be conscious of and aware of how this affects us and our clients. And so definitely I'm leaving here with a nudge to reassess with my controller what we're doing and making sure that that's being addressed. But the same thing is also true for you. Now, as a summary, I also like the 3 questions that were being used to determine whether or not that tax is necessary. It's that nexus of not only the proximity and the thresholds, but it was whether or not the good is a taxable good, and then at the same time the assessment of whether or not you're needing to actually be collecting it. So great questions. These are all things that I'm glad we were able to cover today in the show. So Jason, do you have a final thought?
I would just say this as a core principle of Peisner Johnson: when you help other people, you help yourself. When you come to a what's next consultation, you might think it's a sales call, but it's not. It really is to educate you on the issues. You learn a little bit about us. We learn a little bit about you. And if you walk away from that better educated, more confident in next steps and some peace of mind when it comes to this topic, then we're perfectly happy in that situation, because we really believe that when you help other people, you help yourself.
Very good. Perfect. Well, Jason, thank you so much for being on the show. And if you've enjoyed this episode as well as this discussion, please go ahead and subscribe to the podcast, set the reminders, and get the notifications as we release episodes each and every week. Also, go back and check our other episodes where we've discussed various topics with the experts, things that you need to be aware of as you're running your business. As well, if you have any questions about this or other topics that you'd like to discuss further, feel free to give us a call at 801-265-3777 or visit us at universalaccountingschool.com. And always remember this: if it's about accounting, it is universal. Take care and have a great day.